As a business or individual, it's likely that the next time you go to borrow from a commercial bank, the interest rate will be higher than 21%. If you are servicing a loan, your monthly installments amounts could increase. This is because government is borrowing from the same banks where you borrow and at a higher interest rate.
In the market right now, what normally happens in the market is that any heavy government borrowing will crowd out the private sector. And part of crowding out the private sector is lending rates going up. With interest rates on treasury bills and treasury bonds going up, it is most likely that the private sector will be crowded out.
Government is borrowing because it must fund the budget, but individuals and businesses are paying the price now. Some think government can borrow from elsewhere without disorganizing the private sector it purports to support.
Well, we are saying that government is very welcome to come and borrow on our trading platform. It does not, when they borrow from our trading platform, the upward pressure on the key price in the economy, which is the interest rate, is not so much as when they borrow direct from the banks. Because when they borrow from the banks, they are competing with you and me.
The increase of interest rates could not have come at a worse time, with the runaway exchange rate, which will have its own repercussions. So much so that some analysts predict growth will be affected going forward. Samuel Setumba, NTV Business.